Before we start the proceedings, let me welcome our moderator for this panel discussion, Mr. Sylvain Merlin, Deputy Resident Representative, UNDP Egypt, who will moderate the panel session. And are you going to introduce the panelists, or do you want me to do so? Okay. Our expert group of panelists comprises of Dr. Dalia Abdelkader, Chief Sustainability Officer, Commercial International Bank, Mr. Andrei Permana, Director of Business, Indonesia Infrastructure Guarantee Fund. Also, Mr. Sanjeev Gupta, Executive Director, Financial Services Africa Finance Corporation, and Mrs. Manal Hassan, Director of Group Sustainability at Sweden Electric. I now hand over to Mr. Sylvain Merlin, Deputy Resident Representative at UNDP Egypt, who will moderate this panel discussion.
I don't know if thank you again. Okay, we'll have a very short panel, which will be a hard break to what happened before. So I'll start right into it with Mrs. Manal Hassan, Director of Group Sustainability in El Swedi Electric company. So Swedi Electric has complex multi-country operations and manufacturing. It comes with countries' exposure, and at the same time, Swedi has a strong commitment to sustainability. So you have purchased in the past policies from ISIC to facilitate your operation. You have also a long-standing relationship, and I understand you just signed an MOU with ISIC just today. So my first question is, how did you benefit from ISIC in general? And beyond that, what are your own climate action targets, particularly in reference to your low carbon commitments? Do you work towards, how do you do to originate projects that go in that direction? And regarding ISIC new commitments toward climate action, how do you think you will be working together in the future, based on this MOU as well?
Now? Yes, okay. Our relationship started back in 2005, and it was our first deal, and it was to really cover the risk in Sudan. And we were, the first finance that we did with the group was around $60 million, and where we were able to facilitate doing transformers and substation and cables, and this was our first, okay, thank you. This was the first time that we did a business with the bank. However, we were very impressed by the professionalism of the team and the paperwork and how they facilitated everything, and it was done very fast. So we moved on to the second transaction of growth, and it was in Ethiopia, and they were able to finance even a longer term business deal with us, around 125 million euros and around $95 million on a large scale for 7 years. The partnership protects us in the security from the default of payment and as well from any risk that we are taking in the operation countries. Today, this memorandum that we signed, we're very happy with, because it is actually mandated with us to our climate change and decarbonization strategy, and as well with the water risk. Now, how we actually will work in this memorandum of understanding is that it will support us in the PPP projects, it will support us in renewable energy investment, it will support as well in doing business not only in Egypt but as well in member states. Our journey of decarbonization as our industry is really split between production. We have 28 production facilities across the continents, and we have more than 300 type of cables that we export. Started by us looking at the international trends, and I would advise that each industry should compare itself to the leaders. So to us, we looked at models abroad in the US and in Europe, And we've seen the standards and their decarbonization map, and from there we drafted a strategy. Companies should have the board approving to do the motion and the roadmap, because if the board is committed, then it will facilitate everything. We're so looking forward of the support of the bank in our next phase, which we will update our sustainability strategy. We actually have it up until 2030, but online we stopped at 2023, since we're in 2022, so we will update it to 2025. So definitely, we really, really appreciate this memorandum. Thank you.
Thank you, Manal. I'll turn now to Mr. Sanjeev Gupta, Executive Director, Financial Services for the Africa Finance Corporation, based in Nigeria. IFC is an African MFI focused on infrastructure solutions for African growth, with a broad equity and debt portfolio. So you are de-risking and structuring infrastructure projects to make them bankable in Africa, including through the use of insurance products, like ISIC is producing. So my question is, do you use policies like the one proposed by ISIC? And what does it do to you, in particular with climate action project, for example, in line with your recent white paper, which is called Roadmap to Africa COP, a pragmatic path to net zero, which has been very much appreciated. And more broadly, what is the role of credit and political risk insurance in facilitating climate action in Africa, in your experience?
Hi, good afternoon everybody, and thanks Sylvain for the question. I actually owe an apology to my fellow panelists and to the audience, because I'll have to rush in 5 minutes because the meetings did get delayed and there's a couple of meetings that I can't say no to. But it made me chuckle a bit, because here I am talking about insurance and risk mitigation. And having worked in Africa for the last 30 years, I thought that I should keep enough insurance today for a half an hour, 1 hour spillover, which I didn't. So I'm sorry about that, because that's where I think insurance starts. But be as it may, the bigger point that you asked is, as a multilateral institution, investing in infrastructure projects across what is now 34 countries for us, how do we mitigate risk, and how do we use insurance? So very quickly, I just want you to know this, that we use insurance heavily, very heavily. As a matter of fact, in the last few years, we've probably done insurance covers of close to $2 billion on our project finance transactions. And why insurance is important for us is for 3 reasons. And I want the audience to appreciate it, because of the continent that we are working in. First is obvious. It mitigates our own risk in terms of the exposures we have, and creates a more risk acceptable or tolerance acceptable limit for us to invest. The second and the most important thing when it comes to using insurance, which maybe a lot of people don't quite see, is that it allows us to distribute it that much more easily. It allows us to distribute it globally. As a matter of fact, a lot of our project finance exposures we have managed to distribute to even fixed income managers in the US, and insurance and life funds in Europe, because they're looking for positive yields, right? And the third thing that it does for us and for Africa by default is it kind of brings capital to the continent. Because when we go and raise capital for our own institution to underwrite our business, we have difficulty, we have a challenge. But when we use insurance, by default, by design, obviously it releases capital for us, which is why insurance for us is so important. One quick comment on the role of insurance going forward, and the role of multilaterals globally and private sector capital, if I may, because I'm going to excuse myself, is that obviously the climate agenda being what it is globally, notwithstanding, and I want to repeat this, that notwithstanding the opportunistic approach that the rest of the world is taking about climate agenda vis-a-vis energy security. There's an opportunistic thinking there. The continent of Africa is struggling because it is not attracting capital at all now for developing its fossil fuels. So on one hand, you have the excess liquidity in global systems, which is not coming in because of the climate agenda, and secondly, the risk perception. So what we are hoping is insurance products and the ability of private sector capital to then come in on the back of insurance will help the continent to attract capital in the renewable sector to start with, and hopefully on a more selective basis in the fossil fuels sector, which we still need. So I hope the rating agencies, the insurance sector, they cut us some slack on this particular aspect. Sorry, there's a lot of stuff that I kind of reeled off very quickly. I hope I made some sense. You will have to excuse me now. I'm sorry about this.
Sanjeev, we promised it would be a short panel and an efficient one, and you delivered. And your experience of structuring these deals is very useful to us. Good luck with the minister. That's okay. We'll keep it cozy. No, I want to turn to...
Okay, I'm sorry. I do apologize for everybody, but I have a flight at 3, so I have to leave. But thank you so much.
No, Andre, you can come closer to us. We're going to make it cozy. It's not a panel anymore. It's a fireside chat.
Yes, it's a chat.
So I want to turn now to Dr. Dalia Abdelbakr, Chief Sustainability Officer, with the Commercial International Bank, CIB, in Egypt. CIB is the leading private sector bank in Egypt, offering a full range of financial products, notably supporting exporters, sustainable finance, and most notably emitting green bonds for the first time in 2021, and the first one to do so in the region as a commercial issuance. So with this commitment to sustainable finance, could you elaborate on climate finance, what it means for CIB, how you deal with risk, with credit and political risk, and is de-risking something you are offering in one way or another to your clients? And how would you benefit from what ISIC is providing for the member countries of the Islamic Development Bank?
Well, thank you. CIB actually brings to the table a different approach that I would like to share with you and potentially share with the Islamic Development Bank. The way we see climate is we do not do risk insurance, climate insurance. We do risk management. So it's not insurance, it's risk management. And this is by virtue of the fact that we issued our green bond, and along the way, we managed to integrate sustainability inside our systems and strategies. And we reached a point whereby we can see the business case of climate change. So it's not like we have to transfer risk. Insurance is about transferring risk. We manage risk. Managing risk is through two things, two approaches. Environmental social risk management system to mitigate the impact of our portfolio, of our lending portfolio on the environment. So we diligently screen the environmental and social impact of all our lending transactions on the environment. We have a specialized team for that. But it's not only our impact on the environment, it's the impact of climate change on our portfolio. And that's why we subscribe to the TCFD, and now we are managing climate risk, conducting scenario analysis and stress testing. So we manage risk. We do not export or load off risk, right? The other thing, which is the other side of the coin, is we identify the business case of climate. Climate change is a mega trend that offers you opportunities and threats. If you do not change your business model fundamentally, you're left with the risk, and the easiest thing is to seek insurance. Insurance is the last defense line. It's very important, but this is not the first step. The first step is to manage risk, identify the business case, because climate offers us and our clients business opportunities. Funding SDGs creates investment needs of around $5 to $7 trillion annually, and that's growth. The fastest growing businesses since 2019 are the sustainable investments in terms of amount, size, and profitability. That's why CIB in April 2021, we became founding signatory of the Net Zero Banking Alliance, and it was not mandated. It was a voluntary decision because we can see the business case of decarbonizing our portfolio. So in a nutshell, we manage risk, identify the business case, and if Islamic Development Bank and ISEC manage to see that along the way we need support, because this is what we do, but how we do it is through bonding with our clients. And it's not the conventional funding, nor the conventional transfer of technical assistance, not just that. And it's not the de-risking in the financial sense. We usually think of de-risking as the cost of capital, sharing the cost of capital. Our experience with the IFC, who helped us develop the $100 billion green bond, there was no concession, and it was not cheap. There was no preferential rates. However, the technical assistance, helping us with the infrastructure, helping our clients, not only technical assistance, moving to our clients, sitting with them, identifying the business cycle, and helping them find the business case for climate finance, like energy efficiency, renewable energy, green building. We offer them EDGE certification. And we create the ecosystem. A couple of days ago, we launched a Sustaining Sector Program. It's a knowledge hub, multi-stakeholder platform to empower different sectors in Egypt to find the business case of climate finance and to empower them to grow. So what we offer mainly is sustainable finance products, funding, no preferential rates. One program has a kickback, but we don't count on this because we don't want to position sustainable finance or climate products as something that has to be incentivized. If you understand it, it has a built-in business case, and impressively, when our clients see the business case, they found that the capital investment is, that the operational savings and costs, energy efficiency and cost saving is much better than the initial capital cost. So in a nutshell, insurance is the last defense line, and it should not preclude us from seeing the business case and the beauty of climate finance if we understand the business case.
Okay, thank you. I like that. You're bringing us a useful alternative outlook on risk, much more qualitative. No, and I have another question. I'll come back in 1 minute. No, I want to turn to Mr. Andre Permana, Director of Business at the Indonesia Infrastructure Guarantee Fund, or EIIGF, or also called PTPII, which is one of Indonesia's Minister's Finance special missions vehicles, mandated to provide sovereign guarantees on political risk for PPP, mostly infrastructure PPPs, and on credit risk for state-owned enterprises program. Now, in May 2022, so that's last month, you have guaranteed a portfolio of around $30 billion with 40 projects. So that's quite impressive. Now, your clients are in different sectors, both green, traditional, but also green infrastructure with wind and solar. How do you balance both aspects of your portfolio, and what are your climate action goals? Have you set climate action goals? What are they? And what opportunity do you see in facilitating this part of your portfolio, which is a bit new?
Okay, thank you, Sultan, for the question, and Dalia, nice meeting you. Ladies and gentlemen, good afternoon, everyone. Assalamualaikum warahmatullahi wabarakatuh. So, answering to your very interesting question, and just trying to enhance a bit and clarify that out of the 40 projects. Oh. No, okay. Out of those 40 projects, which in total around 30 billion US dollar, it's an investment value. But in total guarantee exposure, we have around 5 billions US dollar. So it shows us there's a leveraging context when we can enable some investment to our infrastructure projects by providing less than 1/30 of guarantee exposure. So this is something that by providing 5 billion US dollar, the government can create around 30 billion value of projects. So this is something that has been intended by the government by providing guarantees, sovereign guarantees to those projects. We can enable some investment, and this is something that, referring to your question, we have also to refer that our role is not only as become the financing enabler, because we know that credit enhancement products, it's enabling financing, right? But somehow when we work with the governments, we also has a role as the project enabler and ecosystem enabler. So in terms of the green initiatives and climate change issues, this is something that we actually deal with in some of our projects. So for instance, when we work in one of the toll road that actually located in a coastal area, it also actually serves as the risk mitigation for the lump subsidence. So when we review the project, we actually have the appraisal criteria on the aspect of also the technical viability, which relates to the economic and economic aspects, and also the environmental and social aspects. So this is something that why we see this sustainability issues is very, very important in supporting the projects that we are guaranteeing. And we have so many projects. The one that I mentioned, the 40 projects, 31 of them are PPPs. We have some more in our pipelines now in many different sectors, including some renewable energies and so on. We see also the trends on, when you see how we see ourselves, how to balance this. First of all, we see the demand for the financing first, and we see the project itself, how it address the sustainability issues. And when it becomes also the concern of the lenders or potential lenders, then we see by our guarantee assessment, which not only for the risk assessment, which can relate on the political risk, but also on the project viability assessment, it hopefully can create confidence to the potential lenders. And for those who are concerned on the climate change issues, we actually expect to convince them more. By now, we have mandated also by our shareholder, the Minister of Finance of Indonesia, to implement the ESG framework. For all the SMVs, the special mission vehicles of the Minister of Finance, we have 5 of them. We have the guarantee fund. We also have PTSMI as the financing infrastructure financing firm. It can provide long-term financing. We have the Exim banks, and also those relates to the renewable energies. So those SMVs are now being mandated to implement the ESG framework in terms of how we can address the concern on the green aspects. So this is something that we are heading to, Sylvain, and hopefully by keeping our mandates relevant to the stakeholders' need and also to our capacity as a public sector enabler, this is something that we can contribute more on the development in Indonesia. Thank you.
Okay. Well, thank you, Andre. I actually like what you're both saying, because it really brings a wider understanding of the insurance. Now, I want to turn back to Dalia, and maybe a little bit more short-term question on what do you think is needed as a way forward to advance climate finance, whether adaptation and mitigation, especially since here in a few months we'll be gathering again for COP27. what are CIB plans in this domain? And I'm curious, is CIB looking at what's happening with the Ministry of Finance, with the Financial Regulatory Authority in Egypt? Is CIB anywhere towards looking into sukuk and green sukuk as a commercial or as a private issuer?
Well, it's a compounded question. But anyway, the way forward for CIB, we have a very clear system building and sustainable finance strategy track. After the green bond, we are heading to expand our portfolio of sustainability-linked loans, expand the sustaining sector program, because we are targeting system transformation in Egypt. No matter how structured, how advanced we become with sustainable finance, it takes two. So I always say, unless our sectors, the whole ecosystem, and by ecosystem I mean government, regulators, technology, MDBs, we should all get on the table, because there are always small gaps that derail. Even if you give a perfect financial terms for a client, sometimes he lacks the knowledge, the technical assistance, and as I mentioned, we saw it very closely, but that you become an eye-opener. And this is a new role for banks. So CIB is continuing with this. After listening to yesterday about WAF-linked products, sukuk, honestly, I was not aware of this power. And I think this is very much, I'll take it back to the senior management and see how, but we are very much determined to proceed with sustainable finance product development, whether on the debt or the equity side, and the system transformation in Egypt, and it's working quite good. You can see that you are gaining territory, and you can see the system transformation, and it's very assuring. That's why I stress that climate is about opportunities. Climate is a game changer. The system, our nature is telling us it's no longer business as usual. So we have to revamp our business model, our risk frameworks, our lending criteria, our E and S and G are part of the formula. And this is established by now. 2 years down the road with the pandemic, which is a social dimension, triggering the worst economic crisis since Second World War. This is not a credit risk. So, we learned the lesson. Financial institutions learned the lessons. It's the ESG. We are progressing with that. On a general level, ahead of COP, I think COP is either a high gain or a high pain thing. It's either an opportunity or it will be a lost opportunity for a region like Africa. For Africa, climate is existential. It is survival. It's not development, it's not economic growth. It is existential. We're talking about starvation and drought. And we are 5 months. We only have 5 months. And the way forward, which I think Islamic Development Bank might be part of this proposition or solution, is to establish African Sustainable Finance Governance Mechanism. Over the last couple of days, we've been listening to panels, and you find inspiring stories, inspiring products, business solutions. You just connect them, and we're there. Let me emphasize that we have to be determined from now on over 5 months to get together, maybe under the leadership of Islamic Development Bank with the Ministry of Planning, Economic Development, African Development, the Central Bank, to target, to prepare the road ahead for COP27. Now, it's very well established that it is finance. It's not political negotiations. We will never get there if we depend on political negotiations. And we want to make sure that COP27 is not another COP. It's not this incremental progress or pledges or initiatives or broken promises. 2 things happened in COP26, which we label as the COP of unmet expectations. However, 2 very significant things took place. The GFANs, which includes 450 institutions that pledged $130 trillion in assets to be allocated to sustainable investments, and the International Sustainability Standard Board, which counts for non-financial reporting. So it becomes like mandatory for investors to allocate their money to investors. So to make a long story short, we have now the supply side. This is the derivative of COP27. It's our accountability to work on the demand side. We have to prepare bankable projects, adaptation projects in agriculture, water, energy, building, and infrastructure. And we have to have this, I mean, the supply is there, the money is there. And mind you, it's not only the GFAN's money, it is our money, because MENA is a net exporter of capital. We have money here, so funding is there in plenty, in plenty. It's our role to get together to do the following three things. Establish a sustainable finance African taxonomy, because we have to standardize the literature. Innovate in sustainable finance products, like yesterday, the Sukuk, the WAF. I mean, there are plenty, the fintech, I mean, it's very impressive. The third thing is a pipeline of bankable projects so that we invite global investors. So this is what I expect from ISIC, is to expand the role beyond insurance. From here to insurance, there are lots of lost opportunities.
Yeah, 5 months, Dalia.
5 minutes?
Yeah, 5 months.
They're over. I'm done.
No, before wrapping up, I want to return to you, Andre. One of the rationales for IGF establishment a little bit more than 10 years ago was to ring fence the Indonesian budget, state budget, to manage the contingent liability of the government and this large infrastructure project, particularly with government. Now, in doing that, you are exposed, and just like ISIC, you have a mission to limit this exposure. Now, so you are a fellow organization of ISIC. How do you see it? So you are the national level, they are the level of the Islamic Bank members. How do you see the cooperation between ISIC and you noting this difference of level difference, maybe also in credit rating, etc.?
Okay, thank you, Sylvain. On this very particular interesting question, yeah. First of all, I just want to highlight and give brief overview to the audience that the IGF model or guarantee model is a bit different than other sovereign guarantee model, which is provided directly by the Minister of Finance. In IIGF case, IGF as a state-owned enterprise is set up to provide the sovereign guarantee, so that there's a function of, you mentioned the ring fencing, when there's certain claim can come from our guarantee, it's not directly hit to the state budget. So there's something that refers to the ring fencing function. Interestingly, with this business model or guarantee model, it somehow creates certain efficiency and more credibility in terms of how the project is being prepared to get the structure bankable. And as you mentioned earlier, it is something that you're also working on your projects. This is very important because typically when the guarantee is not really assessed properly and provided in a prudential manner, this is something that even can create more contingent liability to the government. And in the case of us in IGF, we see this ring fencing function is also somehow can create doubts to the private investors, because they can see this is not sovereign or something, but this is something that our government has been very clear in the regulation and the framework, so that somehow it can resulting to the portfolio of projects that I mentioned earlier, and it's keep coming to in our pipelines. And as you mentioned, we can also see Indonesia as one of the quite active country in developing this infrastructure pipeline, thanks to our government, who is very committed in this initiative. So, in terms of being also the member of IDB, we have actually initiated some discussion with the IDB groups. Initially with the ISEC, we started even as early as 2012, and we renew our MOU in 2018, yeah, Bro Yasser. And this is something that we want to see as the member of the IDB and also potential partner of the ISEC, because we also have a similar discussion with MIGA of the World Bank, how we can structure our credit enhancement products to create a structure that such a way address certain different fundamental issues in the project, not only, let's say, in terms of the political risk coverage that can be provided by ISEC, but somehow we can also see some more fundamental issues on the project feasibility, on the project preparation that's not done properly. This is something that we hopefully can provide a very good pipeline so that it can fly when we go to the transaction. And in terms of risk, we can also be enhanced by the existence of the PRI. So, which hoping that there's a more good pipelines in our infrastructure projects. And talking about the IDB groups, we're also working on the other member of IDB, not only those providing the financing to our projects, but also in terms of can do the capacity building to the member countries, including Indonesian counterparts. So this is something that we are already working on under the MOU. So as a summary, I can say to you that the existence of the cooperation between ourselves as a guarantee fund of the government with the multilateral development bank like IDB and ISEC as a member is very important, especially we see the similarity being the development agencies. So this is something that we hope can be seen also by the potential private investors or lenders to be more attracted to the initiative and more actively participated in our projects. Thank you.
Thank you, Andre. Well, I'm glad we stuck around after the last panel to listen to our colleagues, because I'm really getting a lot, maybe even too much, and I'll try to be wrapping up while being fair to the present and the absent. So I think what we heard is Manal explaining all the good value there is in their partnership, Swedish Electric partnership with ISIC. So from a medium to large company in Egypt, working in the region and in Islamic countries, to partner with the guarantee arm of the Islamic Development Bank. Then we heard from Sanjeev that de-risking is actually doing a lot of things that goes beyond risk, including, as he mentioned, bringing more capital to Africa. Then we heard from Dalia, bringing a very interesting perspective on what is de-risking. First of all, working closely with your clients, not only from the financial side, but also very, very closely with the rest. We're very keen on all your nice plans on sustainable finance. And I have to note what you're saying is that when you deal with mega trends, and there's a few mega trends I can think of we are dealing with at the moment, then we have to deal with probably new system transformation, and not maybe doing reinsurance or de-risking at the margin, maybe reinventing things. So this is very interesting. And from you, Andre, I hear something very interesting, is that guarantee is not taking much risk. Actually, you are not. You have very strict guidelines, and even based on that, you manage to do a lot of de-risking for your project. And I really like the example you mentioned of these projects that are, because they are exposed or because they are doing good things in the coastal areas, well, they're also doing their part vis-à-vis climate change adaptation and climate change mitigation. So I was not expecting we would go that far from a very terse and a bit strict topic of de-risking, but I'm very glad. And I'm glad you two stayed, and we will tell the other two what they missed. So, based on that, Rehan, I want to turn to you maybe to close, and I think we have one video on ISIC activities that should be playing now. So, thank you all for your patience, and hope you benefited from this.
I will just...
At ISIC, our goal has always been to support sustainable economic development in our member states by providing risk mitigation and credit enhancement solutions. And right now, one of the biggest risks facing governments, businesses and the world is climate change. That's why we facilitate financing, trade flows and investment for climate action, and provide solutions that serve our member states' Paris Agreement obligations and the private sector ESG agenda. We support the development of renewable energy projects, improve climate governance around the world, and drive the global transition to a green economy.
Hi, my name is Kurt Martin Larsen. I'm a Managing Director at EKF in the Wind Group. In 2016, EKF and ISIC entered into a reinsurance agreement about 4 wind farms in Turkey. For EKF, this cooperation with approximately 40% reinsurance of our exposure was crucial to complete the transaction. EKF was very pleased to work with ISIC on this transaction, benefiting from your experience and capacity in the region. We appreciate the cooperation with institutions like ISIC to fight climate change all over the world, and especially in the ISIC member states.
We have helped to facilitate the development of 4 wind farm projects in Turkey with the capacity to generate 360 megawatts of electricity, a waste-to-energy project in the UAE with an estimated net reduction of 460,000 tons of CO2 equivalent per year, as well as a reduction of waste sent to landfills. 4 50-megawatt solar power plants in Egypt, one of the largest solar projects in the world, and a sanitation and sewage infrastructure project that would give 1.2 million people in 4 Egyptian governorates a sustainable source of clean water. ISIC promotes and enables real, tangible climate action all over the world, with long-term life-changing benefits for local communities, many of whom face the worst impacts of climate change. We work closely with industry-leading partners including clean energy companies Mazen and Mazda, and sustainable electric and infrastructure company Elsewedy Electric, to create innovative and adaptable solutions that help shape a resilient future. For the planet, for all of us, and for generations to come.
At ISIC, we are always looking to the future. By making climate action a priority, we are working with our member countries and investors to avoid economic risk. And in doing so, we are also helping to protect countries and communities against climate-related risks by providing energy security, clean water, and more resilient infrastructure. Together with our partners, we're paving the way for a sustainable path for our member countries.
Thank you very much. I would just like to ask Mr. Sylvan and our speakers to stay for a few moments, where Mr. Yasser Alapi, the Senior Manager, Business Development Department for ISIC, will be presenting tokens of appreciation. Thank you to our speakers and to Mr. Sylvan and Mr. Yasser Alaki. Thank you. Please, I would like you all to know that our next session will be starting at 2 p.m. sharp, and it's titled Beyond Recovery, the Resilience and Sustainability of the Emerging FinTech Solutions. We look forward to this coming session. It will start at 2 p.m. sharp, so I hope you will all be here, seated and waiting for the beginning of this session. Thank you.